Good morning, everyone. Hope you got your coffee and you're ready to go. Now, first of all, I'm gonna break down a lot of things in today's video because we are, entering quite a volatile time, and I've predicted and said that we're gonna have quite crazy weeks ahead of us. And to sort of keep it short and to get the bottom line out of the way real quick for those who don't have the time for the rest of the video, the bottom line is that this is a trap, a very obvious one, in fact, and I'll go over why and how and what should be expected in the near-term future, and so on and so on. Of course, those who want to understand the deeper sort of meaning and everything and to understand a little bit more about technical analysis are more than invited to stay until the rest of the video, until the end. Before we get started, I will highly appreciate a like, and if you do, subscribe. And if you do want to know more of what's going on and follow up with me, I'll show you real quick. Okay, no, that's not, well, that wasn't the plan. Okay, like so, you can join my, definitely don't forget, when you do watch my videos, to be up to speed, you must press this bell button to be informed on the notifications, otherwise you'll not be informed. It's basically the same thing as watching a foreign movie in just one page, sort of one instance of it, and expecting to know what the whole movie is all about. So, real quick, and by the way, yeah, the Patreon is still discounted. Do not forget, boys and girls, at the end of this week, basically on the 13th and 14th, kind of, in between, this tier will be hiked to $70. So right now it is still highly discounted. And the original price is $100. So right now it is actually 50% discounted, so join in. And if you do want, you can of course get even a further discount by clicking this little ticker. You will get the price to $40 a month. Do not join through iOS because iOS charges some extra charges. Pretty uncool, but they do, and that's why the price may appear higher than what it really is. Okay, so let's go back to the chart, boys and girls. So the bottom line about this, and I predicted all of it, but down to the cent, if you will, in terms of support and resistance levels. In fact, if we're gonna go over our regular chart, I've highlighted, I'll show you exactly. I actually made a free of ads and a sort of community exclusive video yesterday talking about everything that happened. I'll show you exactly what I mean further as we go through the video. Right now I'm gonna go over just the regular price action. And yeah, I predicted basically all of it step by step, and in fact what is happening right now as well, because right now if we look at the continuous contract, what we will realize that the price action roughly is at around 68.22, which is the futures contract, of course, is roughly parallel with a slight margin of just a couple of dollars, up to maybe $10 at most, with the regular contract, which means if right now the regular day-to-day SPX opens up, we will open up roughly around that vicinity, which is slightly higher above the close of yesterday, which means we will roughly open within the vicinity of where the gap is. So we still have a leftover gap. That is something I've spoke about in one of my videos, and I've highlighted. In fact, here it is. I've shown exactly the support and resistance levels that will be tested. In fact, if you look 3 days ago, basically we opened up a gap to the downside. The price action started appreciating, and although it started appreciating, surprise, surprise, Greg was still right. I know there are some weird squigglies on the screen that you're confused about, but these will become clearer as we progress through the time frames. You're gonna understand basically those are drawings that are made on larger time frames. The drawing makes sense only on the relevant time frame, right? Otherwise it gets squeezed or stretched to the point where it's unrecognizable. So basically here 3 days ago, when the price action started appreciating, irregardless, I've expected the price action to drop, as you can see, to this level, 6,743.11. As you see, everything worked out exactly as I said. By the way, those who are unsure, Greg, we didn't see any evidence. Well, either follow up on my videos or be part of the community, because on the Discord I actually posted all these things. In fact, I've shown exactly step by step what do I mean and how it looks like. So here it is. Here's the Discord, by the way. Even shout out to Yunoy. He's kind of making fun of how I predicted everything, including Trump's tweet, which is not the case. I was merely able to analyze the technical analysis of things and come up with what the market was implying that it's going to do. No, I had no idea that Trump is going to tweet the end of the war. We do have all sorts of discussions in the community here, as you can see, back and forth about any sort of topic. We do discuss the market quite extensively. Those who don't know, this is quite a crazy thing that actually happened next to my house, about 1,000 meters, a kilometer away from my house, which this is a kindergarten that got blown up by an explosion of a missile, 2 Iranian missiles that hit very, very close to where I live. So yeah, I was even posting that to my community as well. Of course, we do talk about charts, oil, and so on. For example, the recent rally and the expected drop. You're like, expected drop? Yes, expected. I in fact predicted it earlier on, and I do post charts to my community on the daily basis. This is why I highly recommend joining the community, and right now it is still highly discounted, although so the Academy is discounted, but the bottom line is that my community did not find this as a surprise. They were highly informed, they understand everything. Also, for example, that's one of the squigglies that we are looking at. You just guys don't see it yet because this is seen only on the larger time frames. So my community, by the way, here, for example, look, from the 5th, so basically 5 days ago, I informed my community how we are going to be reaching out. Doesn't matter how. I mean, of course, I broke down the processes, give or take, explained what time frames you can see things on, and so on and so on. But I broke that we are broke it down to how we are moving back to that 666 area. You can see it was done on the 5th of the month, basically 5 days ago, and sort of gradually explaining how we're going to make it to that area. You can see sort of the gradual process. I was breaking down, showing my community and so on. This is why I know it looks like insane drawings for those who do not understand the meaning of, but yeah, you will never understand that. It's kind of like if like I said, if I'll put scrubs and a doctor, and a lab coat, I do not become a doctor. The industry does not have a threshold. You can just buy 100 shares and suddenly you become an investor. You're not an investor, even if you have 1,000 shares or 10,000 shares. That's not what makes an investor an investor. An investor has a vested interest in the success of the company. It's a little bit more complex than just buying a bunch of shares, and being able to have and withstand pressures from the market and sort of stay long term to actually sort of see through the process and the actual investment that you expect to happen. And various other factors I'm not going to break down, and mostly it is just incorrectly perceived jargon that we, the professionals in the industry, actually use, and what we use these sort of terminologies for, and what do we mean by them. People really misconstrued the whole thing. So back to our charts. The chart, as you can see, we opened up this gap and we closed partially that gap. We filling in that gap, meaning having price action cross through the empty levels, the hole, if you will, that gap that was generated through the process of closing at one point of the price action and 1 point in price, and then opening up in another one, which is significantly different, with a sort of marginal significant difference. That difference creates that gap. Now, as we can see, we did fill in partially. We didn't fill in part of the gap. That means we still have just this left over, and I've predicted in the video, which I will break down again, I'll show you later, I've made for my community an ad-free community exclusive sort of thing, which, yeah, by the way, just kind of show you how it looks like. That's how it looks in the community. We have this sort of various segments. Of course, there's the Academy segment, but right there, members exclusive, I made a whole video breaking down and explaining how and why, and oil, SPX, and everything in between, right? Just kind of going through the whole process. I will get to it as well. You see oil as I was explaining it, and you can probably correcting. In fact, if we're looking right here in the 4-hour time frame, what we see already to some extent is a measure of breaking down the correction range with clear divergence. Since we're in the 4 hours, you see, I was highlighting how we're going to break down. That's my community. They got that earlier on than the rest. As you can see, it was yesterday before the market opened. The weekly means we're just around the corner. So that's kind of how my community knows about things ahead of everyone, because I literally keep them informed on the daily basis, as you saw. So none of this was a surprise for them. No, the support levels, the resistance levels that were tested along the way Of course, everything was predicted, including the retest of 6,666.66, with being a psychological level well known, and there are plenty of other ones. But again, my members do understand, because for them, what I'm showing is not a foreign movie. For those who do not understand and have no idea about technical analysis, this may as well be like watching a foreign movie, and they get angry and upset and just call this all rain dance and black magic and go away. It's like, okay, up to you. You can choose whether to admit that you don't know something and expand your knowledge and expand your toolkit to actually be able to analyze and understand, or you can run around and be surprised by every sort of rapid movement, and when the market pulls in one direction or another in a rapid way, and everybody loses their cool real quick. And guess what? Usually that's where you make mistakes. So again, the price action, if we look back to where we were, if we are going to look at the 5 minutes, for example, right now as it stands, right now we're actually bearish, right? We are now actually moving downwards, as you can see, revolving within the narrow channel, given the low volume that we have right now, subsequently having lesser momentum. Lesser momentum results in a narrower channel. Now we are moving within that channel, but potentially, as I said, to that range of 6,848. That's kind of where the ceiling is, although right now you can see we are hanging around where the top of the gap was, as I highlighted on the regular contract. On the 30 minutes, in fact, we are now already starting to see some level of correction, which is not all that great, because we want to see the price action hang out around these levels until the market opens, and because that way we will end up opening within the vicinity of the sort of where the gap is, and filling it in by dropping lower into it. 45 minutes, as you can see, again, we're closing on convergence, basically that confluence of the forces, giving way to that bearish narrative when the confluence will occur. Right now it is still somewhat bullish, so again, we still are potentially remaining in the vicinity of that resistance channel. As you can see, let's get the larger one. As you can see, the larger channel resides roughly at that very same vicinity, so it's not going to be all that surprising if we even slip through, which can occur, retest some of these levels and end up collapsing back down, even though the futures are less active, when sort of less relevant, so to speak, when the market actually opens up and most of the focus goes to the regular day-by-day SPX. Believe it or not, it still is in existence, and the market is well aware of these support and resistance levels. The fact that you stop looking at it doesn't mean the bots and the various systems stop caring for it. In fact, they do, and the structure is pretty much parallel from the regular to the continuous contract, and so subsequently there is a parallel of this on the regular contract, or it's being built up. In other words, this may still play a role. On the hourly contract, as you can see, on the hourly time frame, pardon me, on the hourly time frame, as we can see, we are now at resistance. So everything kind of the very same narrative is being built up throughout the time frames. We are mostly at resistance on the shorter time frame, have a little bit to go when it comes to the larger time frame. Overall, we will see that the momentum is far more bearish than bullish. Right now, we're basically squeezing the last sort of juices out of this bullish wave, or rather bullish correction, because we have already started a downwards trend, which is far more visible right there on that divergence that we're about to have right here on the 4 hours. As we see, we're about to overturn and become a lot more bullish, bearish dominant, which means you will see depreciation of the price, which those who are more sharp-eyed noticed we have this almost parallel structure that's going on internally. Let's see what's going on. Surprise, surprise, we're basically moving on from that sideways channel, if you will, this horizontal channel that was or took us sideways for quite a long period of time, which I warned about as well. And now we're starting to depreciate and switch over to this downtrend, which will of course lead us to depreciate in price over time. As we can see, we're slipping over slowly but surely from that flat to that depreciating downwards. Of course, still very shallow, but we are transitioning, which is more visible in the 4 hours. And as it's more visible, we're about to become more bearish, so it kind of falls in line with the overall direction of the trend. It doesn't mean it's going to happen right away. We still acknowledge there are levels to be tested, retested before we do so. In fact, it's not going to be out of the realm of possibility completely, although less likely given the momentum and how things look. And of course, we have our parallels on the regular contract, which appear to be a lot more bearish. And so this is less likely, but not impossible. On the daily contract, in fact, we are somewhat bullish, although in bearish territory. It does carry a lot of significance. Again, do join the community, do join the academy, the one-on-one academy, and you will learn exactly what all that means. As we can see, again, on the continuous contract, on the weekly, we are still very bearish. As we're slowly sort of creeping on towards the end of the month, we're also going to be closing our quarter at the end of this month. So it's quite significant. We have only 21 days left until the end of the month. In fact, even less so if you think about it. And as you can see right there on the monthly contract, which I was warning all along about, once we finish that switch over, we become significantly more bearish. And as we can see sort of that progression happening, we switched over from that angle to this angle, and now we're already starting to build that downwards angle. Some may think it's a temporary correction. I would argue this is a lot more than a temporary correction. Again, to each their own. Of course, you do need to understand and learn some level of technical analysis skills, otherwise you'll be blind to. You cannot connect dots you are not aware of, basically, kind of to summarize it. Oil, let's go to oil for a second real quick, which also, of course, has a lot of correlation with what is going on with the overall market. Again, you can watch my video. It will be linked at the end of this video. There will be a little window somewhere around there that you will be able to link directly. Will you be able to click and link directly to that video that was originally a community exclusive, and it was kind of, just for the community. But given how the crazy day happened yesterday, I was not able to make another video for the public, and so I just made the community video public, and you guys can watch it now on my channel. In fact, let me show it again just so there are no confusions. It's this video from yesterday, right? You can see it's called Market Update, the 9th to the 3rd 26 community exclusive, ad free, right? That's kind of what it was originally. I just made it, I unlocked it so everyone can watch that, and it will be linked, as I said. That's how you can recognize this video. You can see I even remove the Patreon thingy. By the way, those who do not know, definitely join the Patreon, patreon.com/Greg_re_H. That's how you join my community. Like I said, $50 right now, and only for a limited time until the end of the week. It's gonna stay 50% discounted, and at the end of the week it will go back to 70. So definitely join and do not miss out. Also, actually, the one-on-one academy is also discounted right now, so don't miss out, but not for long. Definitely sign up now before things go hectic, and then I'm just over flooded with students. So do not wait till the last moment. And again, putting on or having some shares does not make you knowledgeable and truly understand what the price action is all about. So as you can see here on oil, we had another gap, which I spoke about in my community, and I said, yes, we will end up testing, by the way, surprise, again, those very well-known and established support and resistance levels, but Greg, it slipped right through. Yes, that can do that, but still, that was the level that prevented the price action from continuing onwards. Some levels are more major than others, of course. Again, technical analysis that will teach you where they are, what they are, which ones are like wet cardboard and which ones are like reinforced concrete. Okay, and it's all conditional. It's circumstantial. You got to understand the circumstances. That is the job of an analyst, right? Read the circumstances and understand, given the rudimentary rules and laws of the market and the technical tools and how the math works, to derive these support and resistance levels. Subsequently, of course, understand the momentum and read that that's what's going to happen. So yeah, there was this gap generated. I did speak about, and you see another confirmation, because most of you don't realize, but this level being so accurate, right? Again, as you can see, irrefutably accurate and acknowledged by the market. This derived from the very same tool that this one is. They're basically derived from the very same tool. And of course, the subsequent 9508 right there, and you can see both of them play the role quite accurately to the point where you literally have to be deaf, dumb, and blind not to be able to understand what it's all about. There you go. It's pretty evident. I mean, come on. Even a blind person can see that. No offense to anyone. Of course, as we progress, we do end up retesting some of the support and resistance levels of the channels, some of which are more temporary, short-lived, some of which are longer-lived. In fact, there is a parallel larger trend that's going on subsequently, of course. Again, those who will not understand the rules, again, for them it's a foreign movie, you do not understand what it is that you're watching or what am I speaking about. But at the end of the day, it's you not understanding does not change the reality or what the result will be. Now, the 5 minutes, well, before I go to the time frames, I did say exactly that, how we will fill the gap and we will drop back down. And everyone thinks that's it, that whole movement with oil is done. And in fact, I've hesitated originally. We were talking about, with my members, about oil, and I was highlighting how I expect oil to drop to 50. It did not drop to 50, it stayed within the vicinity, as you can see, of that 60 handle, although again showed some signs but didn't really break back to 50, which was my expectation, unfortunately. And that's why I was hesitant of making that video, because I thought there is another leg to be had. But the community was aware, and so some of the community members actually potentially benefited from this. In fact, more so, we still do have this leftover gap. But Greg, what about this gap? Well, the trick with oil, oil is such an asset that affects the entire system. It affects inflation severely, profit margins, companies' bottom lines, and basically that sort of affects inflation and ourselves, the consumer, at the end of the day. And believe it or not, we cannot bear high oil prices for long. And in fact, naturally, we start acting against them. The reality is that, well, although as unfortunate as this is, sort of this whole rally thing, and whoever was able to benefit, of course, did, this is not parallel to the market. Do not read this incorrectly. This is not parallel to the market. In fact, it is moving in a completely different rhythm, if you will. And there's this synchronicity that happened right now that misleads people, which is, by the way, very incorrect. Unfortunately, makes you think, oh, well, the market is synchronized together, but it is not. I almost forgot, by the way, here, this is the Patreon thingy. There you go. In fact, oil is doing its own thing. So as you can see, oil is still correcting downwards, still within that, well, not oversold, but basically below that 50 sold territory, right? Bearish, but not excessively so. Transitioning and going into oversold territory, which is bearish on steroids, if you will. We do see confirmation of that right here on our 30 minutes, which will become more bearish as we progress. It is literally on the switch over as we look at things. So basically, we are starting to see, as we progress towards the larger time frames, more and more bearish narrative. The trick here is this: it's probably not going to be going to the same lows as before. As you can see, we are building up towards this overall larger time sort of a trend, and the time frames, as they progress, the wider the channel becomes. We do still see how we can retest 78.96 easily on this process. In fact, something I spoke about in my video. And as you can see, we still are objectively bearish. And in fact, you will see later how we can still even visit those 50 that I thought about. But again, it's inconclusive. But I already learned the lesson of not making the video, not talking about it publicly, because then I cannot say, oh, here, I spoke about it, you know. And so, yes, we are still progressing downwards. But wait, listen to the bottom line, because, you know, do not be misled. So yes, it still does appear that larger time frame sort of channel, if we're looking at the 4 hours, for example, we are looking at what appears to be roughly around 70-ish handle, give or take. But there is another larger channel at play, and who's to say that we're going to retain this channel? In fact, momentum and cyclicality prevail over the strength of the channel. The channel is merely a structure we move within. The momentum and the cyclicality are those who dictate where we actually go. And so objectively, we still have quite a ways down. And as you can see, the overall larger even daily channel is still actually residing within the vicinity of 60 and 50, although the higher 50s but still it is. And yes, it may come into play. It's not certain, but it may. Why? What does the asset even look like this? Well, because the asset is range bound, as we just acknowledged earlier. With every dollar, once we cross the $80, it starts affecting the overall economy quite severely, to the point where we may start seeing, I mean, inflation is already through the roof, although they're telling us otherwise, which is, come on. I mean, it is obvious fucking bullshit, right? I mean, don't you go to the store? Aren't you aware of what's going on? I'm not even sure how they're doing it this time around, how they're rigging the numbers in such a obvious, audacious way, because they're obviously badly rigged. They just cannot be the real inflation, and just that's not the case. And more so, I'm really curious what Kevin Warsh will have to do as we progress towards his nomination. And in reality, the Fed's injection of liquidity is not any good. You're simply diluting at a time. Just the injection of liquidity is bad, because that can result in, it does result in inflation overall, right? Because you devalue your dollar, you devalue your currency, you dilute it basically. You have basically inflation already as is. You have oil potentially will be going higher. And again, why do I mean potentially it over the longer term? Because as you can see, I mean, Greg, on the daily, didn't you just say it's going to break down? Well, it is breaking down, it is correcting down, and we can see some level of confirmation on the weekly here, in fact, as we become more bearish. But this is merely an internal process to the monthly, and the monthly is obviously significantly bullish still, and was implying to become bullish before this rally. Do not be confused. It was moving and transitioning into that bullish trend the same way a bearish trend is sort of a very slow and tedious and has multiple stages to it. The uptrend also has multiple stages to it. Do not be biased, boys and girls. Remember, the very same processes are equal on both ends of things. And here we're about to experience potentially something very similar, moving us back higher to 120 and potentially 140. And even, as you can see already marked on my chart, that 147, the 140s area. And even, of course, even if we will hit these highs, we may end up testing a psychological 150. Although it is extremely difficult to see, because most of you don't realize, and I was about to highlight just earlier, once we cross that 80 threshold, basically we, and most analysts, in fact, I have a chart like this, I don't have it on right now, but we do have at least increments of every single dollar going above the 80, because even 80 itself to normal times, which is 30, believe it or not, is tremendously excessive. It already is affecting us severely in various ways, from energy to raw material, right? Oil-derived byproducts, various byproducts that we use for our manufacturing and whatnot. Basically from our fuel to our raw materials to plastics and so on, even rubber nowadays, because a lot of people do not know that natural rubber that is derived from trees that actually get diseases and can get fungi and all sorts of crazy things and die, and drought and all sorts of natural issues that can cause them not to yield as much natural rubber. And now we actually have a significant deficiency of natural rubber. So in fact, guess where we're getting the substitute of that? The analogous, right? We get it. Those are also petroleum-based or oil-based byproducts. So basically, as you can see, oil still is on a bigger trend of things, is going higher. In fact, don't say later I didn't tell you, and this is sort of the value of staying all along and watching the entire video. This is it, boys and girls. We are just starting. What you saw, this impulse, is merely an impulse within a framework of support and resistance levels that will be tested on the way up. I know it appears to be overwhelming what you're seeing on the chart. Let me try and help you a little bit right there so you can see things. There we go. So basically what this implies, this bullish transition, okay, as we are in oversold territory with clear divergence. The larger the divergence, the more lengthier and stronger the impulse is, and the potential wave that is going to come out of this. But again, this alone doesn't mean anything. the real issue here is that we actually are seeing a transition on the larger time frame, on the 6 months, that implies that we are becoming bullish, even if temporarily so within the framework of the 6 months period of the half-year chart can actually mean a period of months. And months can result in a significant price appreciation, meaning, like we said, all the way to 140, 130, that range that we have major support and resistance levels. I know it is insane to think about, which will also drive inflation higher, just like I said earlier. And so I really do struggle to see how Kevin, I'm not even talking the supply chain and the whole war thing. And I know people are saying Trump tweeted the war is over. The war is not over. It's just, I mean, we're winning. I mean, the Iranian people are absolutely, celebrating and are happy because the IRGC are being demolished and they're finally getting their freedom that they were, aching for literally hundreds of years at this point. But sort of 50 years for the modern metric, which is not true. In fact, they were waiting since the late 1800s that they've been taken over by various Muslim forces, the Muslim Brotherhood. And so, yeah, again, and by the way, those who do not know, we are still building up an upwards trend, which will, again, we will see result and express itself on the 12-month, on the yearly chart. As you can see, we are becoming predominantly bullish right now. Of course, that is the bigger picture of things. As we always go to the bigger picture of things, this is where the source of the information is. Source, not sauce. Source, right? Be adults. So the source here implies that we are on a build-up of a bullish trend, the same way we say it is gradual downwards and sort of has processes. The very same way it goes on to the upside. In fact, it's kind of funny how sort of parallel it is. No, not really. We call that asymmetrical symmetry. The market does have that tendency for various reasons. That, of course, if you do understand technical analysis, you understand this is not surprising nor irregular at all. This is very regular. This is part of the cyclicality, as we're going to be appreciating, of course, in price on the smaller time frames. This will execute itself and will express itself, and so we will see that sort of play through that very same process that we're talking about here. You can see it starting to occur. Don't say later I didn't tell you. So oil will appreciate, although right now it's experiencing its internal processes doing so. And yes, the overall movements with oil are quite rapid. That's why you cannot wait for the last second. And usually they will happen in the least convenient time for you, unless you have, a very unique sort of account in your position, in a very unique geographical way. Only few entities and people have the access to these things. When magic surprise, these things happen on a, Saturday afternoon when about 90% of people do not have the access or something, right? So, the bigger picture here is that oil still is going higher. The market is still going lower, especially when we look at the bigger picture when it comes to the market, something I've been talking about quite a bit. I know this looks very discombobulating. Just ignore, what is not relevant, what we're not speaking about right now. So as you can see, again, on the weekly, we start to see more and more expression of that bearishness, and we do understand that eventually this will flip over and overturn, but this will flip over and overturn. And remember, I mean, the real trick here is in reading the stochastic RSI is understanding that everything that happens, even the bullish impulses below the 50, still are a part of a bearish overall wave. So as long as we stay below the 50, we are bearish, quite objectively so. So that kind of what is going to be happening as we're going to be progressing through this larger process. You see how things start to connect? Basically, we will see these movements back and forth within the smaller time frame remaining in bearish territory, signaling that it is actually a bearish impulse, and expressing the impulses, the internal impulses that are going to be occurring inside, but still an overall direction. That's kind of why we say the trend is your friend. Do not fight it per se, because it's taking you in the right direction. It's like a river that can change the flow, directional flow back and forth, but the overall directional flow right now is southwards, if you will. If that's north, that's south. Okay, get the idea. I think I've covered everything I wanted to cover. Of course, boys and girls, your individual assets will be affected by it, the vastness of the market, why we're talking about the S&P and mainly about oil, because those are the main forces that will express what it is that we expect to be expressed in the market. They kind of signal the ability to read the S&P, the overall indices, are may as well be an overall overarching signal for us for our individual assets. Of course, not everything, but most of everything. There are exceptions to the rule. Again, do join the community so you're going to understand these exceptions and why and how they work. But overall, the bottom line, again, to those who, thank you for staying that long with me and really want to understand the whole gist of everything, is that basically the bottom line is that this is a trap. This is a very obvious trap that's going to make people to be very badly misled and think, oh, look, we're going higher. Yes, within the process of going higher, we have downtrends, temporary, weak, corrective downtrends. Within a downtrend, believe it or not, we're going to have temporary, weak, corrective uptrends, but overall overarching movement is still bearish. Do not say later you were not told. More so, do join the community. I work tirelessly with my individual students, tirelessly on reporting to my community. Absolutely, even while we have a crazy war and missiles being shot at us, I literally do everything I can do for my community. They are I'm absolutely so proud of them. So many of them made so much money throughout this sideways process and various assets that did bump. Some, unfortunately, still are in the learning process. To each their own. But a lot of people were able, instead of just sitting, idle and just seeing their ROI just decreased because their average price was following behind them as they were DCAing, and now it ended up being within that range on the top, and they are here and they already are in the red, which is very unfortunate. They are the cannon fodder of the market. This is literally how it works. You're being misled by your various media bubbleheads that tell you buy when you should be selling. And again, I'm not here to tell you what you should be doing. I'm merely here to give you the tools and the independence of actually being able to read into this and then decide on your own whether you should go one way or another. I think my cat is going bananas. I hope you guys cannot hear that. My apologies. All right, so that's kind of it. Again, those who do not know and stayed for me for this long, thank you very much. First of all, shout out to all the new patrons and all the new members. Definitely do join the community, join the Patreon. The Discord is private. That means you cannot access it unless you have a member's subscription. You get that subscription by joining through the Patreon. Remember, you can make this $40 even, quite cheap given all the amount of information and meetings and everything we do. By the way, today in fact we're gonna have a members meeting with everyone, including the patrons, including these members as well. That's going to be, an actual, well, we do it on Discord, but it is the equal of a Zoom meeting where, we see each other's face. We can, throw jokes in the air. We can make fun. We can talk about geopolitics. Everything is completely in the open. Hang around and of course talk about the market, talk about technical analysis, break down what it is that we see, answer questions, Q&A, and all that fun stuff. So we do quite a bit of stuff in the community. Definitely join right now while it still is discounted, because like I said, at the end of this week, this price will be hiked to $70. Okay, understood? And the following month, it's going to be $99. So in other words, guys, join in and lock in that price. Otherwise, you'll never be able to get it again until some like Black Friday or Cyber Monday discount, and maybe not even then. That's it, boys and girls. That is all I had to say for now. I hope I'll see you all in the community. Do not forget to like and subscribe. And definitely, very importantly, do not forget to ring the bell. Otherwise, you will not be informed. You will not be aware that there is new information to follow up and understand. It's like watching, like I said, one episode out of an entire series and expecting to know what the series is all about. No, that's not going to work like that. Alrighty, boys and girls, see you on the next one. You'll have a wonderful day. Hopefully, I'll make another video later today. Of course, a members exclusive and a members meeting later today. That's it. See you all on the next one. Bye for now.